The Fed set to meet this week, and the White House National Economic Council director is calling for a 25 basis point cut. Joining us now, the aforementioned White House National Economic Council director, Kevin Hassett, who's, I don't know, it's growing. He's growing in size. And I think I need to call you Mr. Director now, just the anticipation of maybe even greater things for you in the future.
That's all
you're
you got.
at 78% now on some of the things. So we're going to have a wide-ranging talk, Kevin, because it all. Oh, I just said I was going to call you Mr. Director, and then I called you Kevin. But you think about 3% inflation, affordability. Should the Fed be cutting? I think Myron would like even more than 25 basis point cut. We might have dissension on both sides. What do you think the Fed should be doing right now? Doing more than 25, or should it be a dovish cut instead of what people are predicting? People are predicting a hawkish cut, where they jawbone that maybe this is it.
Well, it looks to me like Chairman Powell has done a good job of herding the cats at the committee. That if you look at the comments that different committee members were making just a few weeks ago, that it looked like they're very evenly split about whether they should cut or not. And I think that Chairman Powell agrees with me on this one, that we should probably continue to get the rate down some, do so prudently with an eye on the data. And so I think that it's an example of, you're managing a committee. The committee was really in diverse opinions before, and it looks like Chairman Powell has done a good job of getting people to circle around the futures markets the right answer.
Well, how restrictive do you think the Fed is right now in terms of away from where it should be? How much would you, let's say you were in the job, what would you be looking forward to in addition to this cut, and then next year? How many more?
I hate to disappoint with the sort of counting of cuts, but I could say that what you need to do is watch the data. We've got a lot of missing data because of the government shutdowns. We're going to get really back-to-back jobs numbers pretty soon. And so, I think that the Fed chair's job is to watch the data and to adjust and to explain, why they're doing what they're doing. And so to say I'm going to do this over the next 6 months would be irresponsible, really. And I know you don't want me to be irresponsible. I mean, you do sometimes, but not right now.
I do, and I'm not expecting to get a lot of answers about whether you are the president's pick or not. But when the president the betting markets went up to 80% after that meeting where you were standing there. I was watching, and you were standing. You were standing there, and he said, "Yeah, we've got one in the room, a potential Fed." And I've done your face, because I was kind of like. And I was just wondering, what were you thinking at the time? Wow, I got it, or wow, I'm embarrassed, or wow, I wish you wouldn't do this, or I'll just whatever the president wants to do, I'm okay with. What were you thinking when he said that?
First, I support the president 100%, and he's very, very good at playing the drama of things. The thing I got to say, though, is people are talking about it. I think the markets kind of have it wrong about how the president has a tough choice. If you look at it, Chris Waller is one of the best monetary theorists of the last generation. He's got papers in places like the Journal of Economic Theory that were really the path-breaking papers that showed us how to model monetary policy. Mickey Bowman's the best regulator on earth. I talk to her all the time when I'm trying to think about what about this, what about that, what happened to SVB. And Kevin Warsh is about the most experienced Fed person that there is. He was there during the financial crisis before. So the point is that the president doesn't have a tough choice. He's got a guaranteed good choice. And if I happen to be that choice, I'll be pleased to help him serve.
I want to get into the affordability thing eventually, but I want to get into it this way. We've had a couple of people defend you recently. Brad Gerstner, we just had Jeremy Siegel say you're not going to be a rubber stamp in terms of easy monetary policy, that you're an established economist that would make the right decisions, I guess, to raise. But it does, at 3% inflation, it is on everyone's mind right now, because that's above target. That's much higher than what the Fed would like. And I want to talk about affordability, because suddenly it's a buzzword. Look, 23% of these price increases happened under the Biden administration. Sure. Now, the president's been in for not even a year, but inflation is still too hot, and it's above where it was when he came in. So you would need to think about, as a Fed chief, whether cutting is the right move right now. And there's an article in the Journal today, advisors are urging the president to start acknowledging that people are hurting or that there's an affordability problem. And he's been saying it's kind of like a Democratic talking point that doesn't exist. How should you be handling this? Because the mainstream media is going to play it up.
Sure.
The buck stops with who's in the White House. And even if it was Biden's problem, the president's getting blamed.
Right. Well, the way that in the end, with an eye on the horizon, that this problem gets fixed is that real wage growth goes up enough so that that huge 23% hole that was dug by Joe Biden is a thing of the past because people have money in their pockets, enough money in their pockets to bring their real standard of living back up. The real standard of living in the U.S., the purchasing power of ordinary Americans has gone up by about $1,200 so far this year. If you look at the great data on Friday that said that real wages were up 2.5% over the last few months, that happens when you get positive supply in the economy, and that's what drives growth up and prices down. And so what you ought to do is lock that kind of gain in where you're seeing real wages coming from positive supply shocks. And if you do that, then just as in the 90s when we had positive supply shocks from the computer, and Alan Greenspan was willing to sort of let the economy run a little bit hotter, we have an opportunity with AI and all the productivity that we're seeing to do so again, but to do so with a great deal of caution as you watch the inflation numbers go by. Because the one thing we know is that inflation hurts everybody in the economy. And you saw that in the last election. I'm sure the last election was very much an inflation election.
Kevin, nobody likes inflation, and I think part of this administration's plan to try and get affordability, really within more affordability, I should say, out there, is to lower mortgage rates, right? Have car loans come down. Part of that is the Fed lowering those interest rates. We have seen the 10-year Treasury jump up. It's not a spike, but 4.14 versus 4. On the expectation even that when the Fed is going to cut rates again, we think, to see the 10-year move higher, just as it did when the Fed originally cut 100 basis points, it does raise questions about how much control the Fed has over the longer end of the bond market, what that means for things like mortgage rates that are set off of the 10-year. We had Ed Yardeni on this morning, and he said he thinks it may be that the bond market is concerned that inflation is not under control at this point. What do you think?
Well, I think the bond market is still much improved from the beginning of the year. It's fluctuating around a little bit now. I think in part that could be related to the uncertainty over what the Fed was going to do and signal in this meeting. The bottom line is that if we get inflation down with positive growth like happened in the 90s because of the positive supply shocks, then there's plenty of room for the 10-year to go down. But that's going to require discipline and keeping a close eye on things. But absolutely, when you see real wage growth over the last 3 months of about 2.5%, that's a sign of we're in the midst of a positive supply shock, and that's really good news both for equity markets and for bond markets.
I just wondered, is this article accurate? Have some advisors been saying to the president, you got to recalibrate your response to affordability? And I can remember during the Biden administration, when the Biden administration would blame the feeling that the economy wasn't going well on the media. I used to say that's just patently absurd. But that's kind of what we're hearing now, that, there's, almost, ignore the public's feelings about how, they feel about the economy at your own peril. And I'm just wondering, did that ring true to the president, that maybe he needs to he's in the White House. He may not have caused it, but the buck stops with whoever's in the White House now in terms of how people are feeling.
There's a huge amount of positive news that the president is going to be breaking this week about the economy. We've got a person who actually approached the studio with me, walked with me, who's tracking the openings, the groundbreakings for the new factories that are, in the trillions of dollars of announcements that the president's been making. And we're up to almost 30 of those that actually the groundbreakings have happened. And so there's a lot of positive news that's positive for people's jobs, for people's incomes, and for inflation. And President Trump is just going to go out there and remind people of that. But in the end, again, going back to the eye on the horizon, that President Trump's economic policies were profoundly popular just before COVID in his first term because he had $6,500 of income growth after the big tax cuts. Yep. And so right now we're going into next year where the typical person who's got no tax on tips, no tax on overtime is probably going to see an extra $1,600 to $2,000. A lot of that will come as tax refunds in the beginning of the year. That kind of stuff is going to make it so that people are going to look at their wallets and say, oh, boy, this guy's really making me better off. And in the end, that's more important than any poll. The final thing I got to say is that we did look at a lot of the sentiment, the softer indicators over the last few weeks, and we found a pattern that I'm sure you guys could find a chart that would show, which is that consumer sentiment it tends to crater when there's a government shutdown. And so we have sort of back-to-back 4% quarters coming in, and then we got the government shutdown and all the chaos related to that. And the sentiment indicators went down, but the hard indicators really didn't. And that's a pattern that we've seen over and over again.
Kevin, the Democrats would say the shutdown was entirely about these subsidies, even though, that's what they picked to shut down the government over, obviously. But you can't talk about inflation if you don't talk about health care and rising costs that are across the board in health care. What do you think, not just Republicans, I don't know if it could ever be bipartisan, but what should the government be doing about these subsidies right now? Should there be, in good faith, bipartisan talks about extending these subsidies or not without guardrails? How do you think that's going to go? Because it all comes into the affordability discussion.
Well, the president and Republicans, brought forward two big policies in the big, beautiful bill. One, about $50 billion to rural hospitals, and then about $30 billion for cost sharing to help the people who might be affected by these increases that were really a Democratic policy because of the expiration of the extra COVID subsidies. And so the cost sharing stuff was thrown out by the parliamentarian, but it shows that there's room for negotiation about something that could be good for people. I mean, we obviously want lower health care costs, but also we got to get the fundamentals down. And don't forget that for 2 years in a row under President Trump, we were able to get the consumer price index for drug prices to go negative for the first time since World War II because all of the hard work we did working with drug companies to make drugs cheaper for Americans. And you've seen how much hard work we're doing again on that. And I would expect that we're going to see another third year of a negative CPI because of that. And so we got to get the fundamentals right. And, I'm going to see Senator Thune in the White House today. I'm sure there'll be some discussion about how we go forward with the health care debate up there on the Hill between now and Christmas.
Some other things are on President Trump's mind this morning. Kevin, just posting on Truth Social, there must be only one rule book if we're going to continue to lead in AI. We're beating all countries at this point in the race, but that won't last long if we're going to have 50 states, many of them bad actors, involved in rules and the approval process. There can be no doubt about this. AI will be destroyed in its infancy. I will be doing a one-rule executive order this week, and you can't expect a company to get 50 approvals every time they want to do something. That will never work. Any comments on that, Mr. Director?
I've seen a draft of what the president's talking about. It's been a top priority for him to make sure that we win the AI race, and I think that the order that he's promising to sign this week, I guess he's reviewed something close to a final over the weekend, is something that's going to really help the AI companies understand what the rules of the game are. As you know, that there are some states that want to regulate these companies within an inch of their lives, and then when they make a misstep, fine the heck out of them, just so that the states that are going bankrupt because of their profligate governments can take some money from the AI companies and so on. And so that's a game that President Trump isn't going to allow people to play. And this executive order that he's promised to come out is going to make it clear that there's one set of rules for American companies in the U.S.
Hey, Kevin, one other question we've been batting around the table this morning was the president said just yesterday that he was going to be part of making the decision about this Netflix transaction with Warner Brothers. And at least the comment that we were making in the past is that the president, this president and presidents prior, I believe, have never at least publicly declared their involvement in these decisions. They've historically been left to the antitrust department with inside the Department of Justice. So how different is this, and how should we think about that?
Well, I don't think it's just rare for presidents to have opinions about big society-changing mergers. But in the end, the Justice Department is going to study things like the Herfindahl Index, the concentration in this industry, the amount of competition that is reduced because of this big merger, and what the responses of all the other companies that are playing in this space might be. That's going to be something that goes on for quite a while. And I think the president is just very interested in making sure that there's a lot of analysis to make sure that we make the right choice. Do
you think that there's more to it now, though, the relationship that a company can have with the president than in past administrations? I think that's what Andrew's alluded to. Is it different than it's been in the past, do you think, the influence that President Trump?
I haven't been inside any other administration than the Trump administration, but I could say something about the Trump administration is that it's about the most transparent administration I've seen in my lifetime.
That's what we agree
with, Kevin.
And so what the other guys were doing probably, is they weren't telling you. And so it's harder to sell. But Mr. Trump lets you know how he feels. And that really, really makes him a wonderful person to work for. I can remember when I came in to work for him the first day in 2017, he sort of patted me on the back and said, don't worry, a lot of people are going to be grumbling at you because you're coming out to the White House, and I got your back. And he's had my back the whole time, and I really respect him for that.
Kevin, yeah. I think it's sometimes so transparent. People are like, "Oh, they can't believe what there's." No, I'm just kidding. Thanks for all your time today, Mr. Director. I don't know what we're going to be calling you, and
Kevin,
in the near future, as long as we call you to dinner, you don't care what we call you. But
okay.
All right. See you later. Thanks.
Thanks a lot, Joe. Great to see you.